This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Hello again from TF Metals Report, and welcome to your podcast highlights for the last week of October into the first week of November 2023. A week that brought all sorts of gold positive developments. A dovish sentiment from the Fed, a lot of expectations of future rate cuts, lower nominal interest rates, and a lower dollar, all sorts of things that should normally lead to higher gold prices. However, as we worked through the week, we saw some overt, deliberate price manipulation by the bullion banks, something we've dealt with now for 13 years and unfortunately we'll have to continue dealing with. First round of manipulation we saw plain as your face back early in the week. Did you know that the spot price of gold has never finished the month above $2,000 an ounce? Been close, but has never broken that psychological barrier. Well, on Monday the 30th, that was all part of what we discussed at TF Metals Report, and we wondered if maybe this would be the month. And then finally, this is your chart to watch tomorrow. This is the spot chart of of gold. I don't talk about spot a lot because, of course, the future's tail wags a spot dog. But I thought I'd give you this to watch tomorrow. This spot chart is a monthly chart going back over the last 15 years. Two things to note. Bullish engulfing candle for the month of October. Unless we lose $40 or $50 tomorrow, and who knows, maybe we will, but that's a pretty solid candle if it prints like this tomorrow. I will also point out to you that at this level, 1999 and 1995, where it is at present, would be the highest monthly close ever for spot. And as you can see, it has never, ever closed above $2,000 an ounce on the spot price at the end of a month. It's in play for tomorrow. Again, not a whole lot of economic news to impact things tomorrow on Halloween, the last day of October, so we'll watch. Be very curious to see, are the bankers paying attention to this chart? You can bet your ass if they are, they probably don't want to see spot gold break out and close above 2,000 on the monthly close and the positive headlines that would generate. So expect a fight. Okay, and so by now you know what happened. Gold did in fact get slammed backward, both the futures and the spot price on Tuesday, Halloween, the last day of October. And as you can see on this intraday chart, every single time it tried to get above 2,000, it was immediately shoved lower. And finally, once it broke cleanly above, it was brutally shoved lower. And in fact, by the time the month ended, gold wasn't even able to post its highest monthly close ever. That honor still belongs to April of this year. So we'll try again in November, but here's part of our discussion on the last day of October. Okay, but looking closer to what happened today, this is the last 2 days, actually, of the spot price. 5-minute candlesticks. And look at the rapid reaction that came in all through the day yesterday and then this morning. Anytime spot in any 5-minute period got above $2,000. Look at that yesterday in the 8 o'clock hour. You had what? Maybe 2 5-minute candles above 2,000, then kaboom. How many, 4, 5 red candles in a row. Then later yesterday morning, 2 green candles again above the 2,000 line, and then kaboom, then 5 more red candles slamming it back. Look at 11 o'clock and then the 12 o'clock hour, tapping 2,000 and getting shoved back. This morning, not long after the COMEX open, getting up there to what about, again, maybe 2 5-minute green candles above 2,000, and then boom, whole bunch of red ones. And then finally the big daddy, granddaddy of them all, bunch of bad war headlines, took spot all the way to 2006, and then, God, I can't even. So what's going on with COMEX silver? It's not going anywhere either. Trading a lot like crude oil and the rest of the commodities, mainly just going sideways. Silver banging around the 23 level. Still not even close to breaking out of its downtrend or attacking the 200-day moving average. But we looked at the chart anyway as part of our discussion on Wednesday, November 1st. Okay, but at least it has broken its downtrend. We cannot say that about silver. Okay, silver definitely shoved back every time it gets anywhere near 2350. And again, silver has not made a higher high versus the middle of September. So you got the high back in May, and then, just a series of lower lows and lower highs. So silver's not out of the woods yet, okay? Yeah, it's trending up off the lows, no doubt, and could go higher from here. But my only point here is silver still has yet to break its downtrend. So just be wary of that, okay? As mentioned earlier, the manipulation of the COMEX gold price by the bullion banks has been blatant and overt all week long, really, for most of the month of October and now into November. This week has been particularly brutal. We've seen rising prices on physical gold buying in Asia and London, and then smashes of the price with paper selling in New York. Oh, sure, there's probably some speculator liquidation, but this is also price management by the bullion banks. We've seen it for years, and we're seeing it again now. Posted this earlier, but I want you to see with your own two eyes. This goes back to Monday morning, 5 o'clock Central. Okay? Price bouncing around down a little bit from where it closed back on Friday, but again, all the way up to 2012, about right after the COMEX open, and then straight down. Continues down through the evening and then rallies beginning at about midnight on London on physical buying. Rallies a little bit after the COMEX open and then straight down into the COMEX close. A little more down after that. But again, around about midnight, up it goes. Buying and buying and buying. And then you get to just after the COMEX open and the PM fix yesterday. Even lower early in the afternoon with Powell, then it bounces back, and then all overnight last night, higher and higher and higher gradually for about $10, and then get to the COMEX open or shortly thereafter, and so anyway, we got physical buying around the world and paper dumping. Again, maybe it's the banks, maybe it's the specs, the hot money flowing back out, whatever. Either way, that's what we've been swimming against all week. And on Friday, November the 3rd, I have to admit to being almost speechless and extremely frustrated. After 13 years of doing this, you think you've seen it all. But apparently I haven't. U.S. economic data was terrible today. Jobs report way below expectations. The service sector PMIs below expectations as well. Now expectations are for as many as 4 rate cuts from the Fed next year. In light of all that, the bond market rallied sharply with interest rates way down on Friday. 10-year note down 12 basis points and down 30 basis points on the week. Dollar index down more than a point on Friday, down a 0.60 on the week. And yet, 2 weeks ago, after rallying in the morning on Friday, COMEX gold was rigged to close the COMEX session at $19.99. Last Friday, after rallying in the morning, COMEX gold was rigged to close the session at $19.98. And today, after that jobs report, COMEX gold got to $20.12 and then was rigged to close the COMEX session at $19.99.20. So with rates down sharply on the week, a very dovish Fed, and the dollar index down $1.60, COMEX gold had a weekly gain of 70 cents. 70 cents. So we'll go take on next week and see where we go from here, knowing that the fight is against the bullion banks. It's seemingly never ending. And all we can do, our only option really, is to continue stacking physical metal in the hopes that eventually a bank run of sorts will force the bank's hands. And we'll finally get a free and fair pricing scheme. Till then, though, we'll fight on, and we'll be back here next week with another edition of your TF Metals Report podcast highlights.